The Bank of Canada just increased the benchmark interest rate by a whole 1%. And if you follow the real estate industry here in Canada at all, you probably already know this. But what does this mean for you? How's it going to impact the market? And what are my thoughts and opinions? Is the market finally going to burst? And are we going to see a massive decrease in prices? Stay tuned to find out right after this. What's going on, guys? Alex Dunbar here with the Dunbar Real Estate Group and RE/MAX Treeland Realty based out of the Surrey, Langley areas. And in this video, I'm going to tell you all about the recent increase in the benchmark interest rate by the Bank of Canada. I'm going to talk about who it impacts, how it'll impact them, and some of my thoughts and opinions. But before I get started, if you feel like you got duped by the government once again, I'm going to ask you to hit that like button. But it's not like they've ever led us to believe something else was going to happen in the past, right? It's not like they've been telling us for the past 2 years that rates are going to stay low all the way up until 2023. And every time they start to build a little bit more trust with us, they go off and do something else. It's kind of like me believing on the one hot day in summer I can go outside and get away with not getting a burn. But unfortunately, I always end up on the losing end of this. But getting back on topic, this 1% increase in interest rates was the largest in Canada since 1998, and it now puts us at an overnight lending rate of 2.5%. The reason why the Bank of Canada has done this is because they're trying to get a hold of runaway inflation, and the primary tool they have to do this is changing interest rates. So with that in mind, let's talk about who this is going to impact. First of all, if you've already gotten approved for your mortgage, there's going to be no change here. You won't be affected. However, if you're currently pre-approved but haven't actually bought a place and gotten that mortgage approval, it's likely that your mortgage qualification is going to change as the stress test increases. In regards to those who already have mortgages, people with a fixed rate mortgage, there's going to be no change here. However, those with variable rate mortgages are the ones who are going to be impacted. However, it depends what type of variable rate product you have. If you have a static payment, the amount you pay monthly isn't going to change. However, the percentage of principal to interest is going to change more heavily in favor of interest. And if you have an adjustable payment, your actual mortgage size is going to change. However, you'll still be paying down the same amount of principal. So how does this impact you? Well, for those currently looking to buy, every 1% increase in interest rates decreases your buying power by around 10 to 12%. So if you previously qualified for $1 million, you're now only going to qualify for between $880,000 and $900,000. Keep in mind, these are just rough numbers. And if you already have a mortgage and it's a variable rate, your payments are going to increase by $52 per $100,000 of mortgage money. For example, on a $500,000 mortgage, this is going to be an increase in payments by about $260 a month, which is going to equate to about $3,120 per year. And just a quick disclaimer here, I am not a mortgage professional. I was provided these numbers by my good friends over at 𝐓𝐈𝐌𝐄𝐒. So if you do have any questions, please speak with them or your mortgage professional. So considering all that information I just provided you, I wanted to leave you with a couple of my thoughts and opinions. First of all, I can guarantee you that news headlines are going to be scarier than ever this week. But what you need to do is not fall for that clickbait. I've said it before and I'll say it again, the media is paid based on viewership. So the more clicks and watches they can get, the better they do. And they don't always necessarily look deep into the data. Keep in mind, the benchmark rate is actually only slightly above where it was pre-pandemic. At that point in time, it was at 1.75% and we're now at 2.5%. So yes, there is a reasonable level of difference. However, it shouldn't be anything to financially ruin anybody. And if it is, you really need to reevaluate your financial position. Additionally, what you have to remember is that the reason why the government raises interest rates is in order to control inflation. This is their primary goal. Their secondary goal is to keep housing affordable. However, interest rates are only one component of a very complex system that creates inflation. Think about it. Increasing interest rates isn't going to decrease gas prices or groceries or the cost of energy or any of the ongoing supply chain issues. So while it will play some sort of a role, I think the government's soon going to realize that it's not going to be able to tame inflation with interest rates alone. And moving forwards, I think this is going to cause some pain before things turn around. I do expect there to be continued downward pressure on the market. However, I wouldn't be expecting a crash. I believe that the government's finally realized their mistake and is somewhat taken accountability for it in the fact that they should have raised interest rates sooner and slower. But now, unfortunately, they're essentially ripping off the band-aid to try not to prolong this. So my thoughts and hopes are that because they're doing this additional interest rate increase, that we'll likely see a quicker turnaround and things headed back in the other direction. Because unfortunately, when the pendulum swings too far one way, which is essentially the prolonged period of low interest rates, it typically has to go to an extreme and too far back in the other direction for there actually to be change, prior to finding some sort of balance and middle ground. So moving forwards, what does this mean for you and where are the opportunities? For those of you that have been looking to purchase a home, below your maximum qualification, this could provide a great opportunity. The reason being, as I previously mentioned, your buying power is going to be decreased by 10 to 12%, which is going to impact the majority of people who typically shop at the top end of their budget. So if you already had a margin between the maximum amount you qualified for and the price point that you were looking at, this means you're going to either be able to A, get a better property for the same price, or B, get a discounted rate on the homes you were previously looking at. A common phrase that we like to use in the industry that's very relatable to right now is marry the home, date the rate. And what I mean by this is don't focus on the interest rates, focus on finding your dream home. So you need to be patient, but you also have to have all your ducks in a row. Get an updated pre-approval, make sure you have your closing costs, understand what it is you're looking for. This may be one of the only and easiest times to buy your dream home in your dream neighborhood in the perfect school district. And if this is going to be your family home for the next 5, 10, 15 years, you really need to keep this in mind. Even if home prices do continue to trend down a little bit, so what? In 5 years from now, you're going to thank yourself and you're going to be laughing because you can always go back and refinance when rates get lower, but the perfect home doesn't come up very often. And when it does, there's usually a ton of competition. And that's about going to do it for my video today. So if you do have any questions or comments, leave them down below and I'll be happy to get back to you. And if you did get any sort of value out of today's video, all I ask is that you hit that like button. Additionally, if you do like videos similar to this one, I make real estate videos on a weekly basis covering community tours across the Lower Mainland and relevant real estate topics here in BC. So if that's something you're interested in seeing more of, I suggest you subscribe to my channel and hit the bell so you're notified whenever I come out with a new video. And if you are from the Surrey or Langley areas or the rest of the Lower Mainland and you're looking to buy or sell or just consider your options, you can scroll down and hit the first link in the description to book a call with me at your earliest convenience. Thanks so much for watching and we'll see you